So the question is, with fewer venture capital firms to fund startups, is the industry making a correction from its glory days, or is it headed for extinction? I spoke with author and venture capitalist Mahendra Ramsinghani to get his outlook on the industry.
Well, Mike, I think extinction is certainly too far away. Even though my hair is turning gray, it'd be hard for me to confess that venture capital is towards the verge of extinction. The way I see it is that we are correcting from some of the excesses we saw in the late 90s. There was about $100 billion that flew into venture capital in the 98-99 period. And this was 5 times more than the startups could hold. The market capacity in any given year is roughly in the $20 billion range. And so when 100 billion flows into a bucket that can hold, say, 20 billion, a lot of it is splashed around and a lot of it is wasted. And we saw all of the waste that occurred aftermath of the 2000 dot-com boom. And it takes 10 years for some of that to clear up. So it's just now that some of those returns are coming back into the black, and venture capitalists are on the upswing. But the caveat here is that the demand-supply curve is finally being understood by both investors in venture funds as well as those who deploy capital.
Let me ask you about some of the developments that may have occurred since the publication of your book in 2011. It seems like some of these entrepreneurs are getting a lot more creative. They're doing crowdsourcing, or perhaps they're finding other ways to fund things. Is that something you're seeing as well?
Absolutely. I think we venture capitalists push our entrepreneurs very hard to innovate. But when it comes to innovating our own business models, we're sort of burying our head in the sand. And when I look at crowdfunding, this is sort of one of the first big leaps of innovation that is occurring in the way capital is flowing between the two parties, the capital that's flowing from investors into the hands of entrepreneurs. So when I look at crowdfunding, it is removing a lot of friction for certain kinds of companies. Today, the kinds of companies that are able to crowdfund their opportunities are more on the consumer side of companies. But if you look at another parallel universe called AngelList, here are technology companies that were historically being funded by venture capitalists. There are 20,000 companies listed on AngelList, and over $2 billion has already been invested by angel investors. These are high net worth individual investors into these companies. So there is a shift occurring in a very dramatic way, which is going to change how venture capital operates in the next 20 to 40 years, most certainly.
So you said there's this push among venture capitalists to push these entrepreneurs to kind of think outside the box. I guess you have to kind of push yourself, in a sense, to do that. So how are strategies changing for somebody like yourself in this business?
So the way strategies are changing are very interesting. To start with, if we take a step back, Mike, this is a service-oriented business. Venture capitalists are no different from a PR firm or a law firm. We are here to serve the entrepreneurs. It's just that, instead of bringing my marketing skills or my legal skills, I'm bringing a checkbook to the table. So as long as venture capitalists look at this as a service business, I think that this model can continue to grow and evolve. We saw a fair amount of arrogance and hubris occur in, the early 90s, even past the dot-com bubble, where VCs thought that the success of the entrepreneur lies in their hands. And that's certainly not the case. So if you look, there are some funds like True Ventures or First Round Capital that are now saying that we're here to serve the entrepreneur. And the way we are going to do it is different. We no longer believe that we have all the answers. We're going to bring the entrepreneurs in our portfolio to help each other. And that's sort of creating this community that helps each other and lifts each other up. That's one big shift that has occurred. The second big shift that is occurring, as we discussed earlier, is how capital flows between entrepreneurs and investors. I certainly see that we have to become a lot more agile in the way we respond to entrepreneurs, in the way we are able to support them genuinely, not some glib talk. And finally, what is the value that we add at the end of the day is going to become more and more critical. Venture capitalists are paid to generate returns, find good opportunities and generate financial returns. And if we cannot do one or the other, we're in trouble.